Hey everyone, my name is Mattia. Over the past few months, words like stock market, investing and shares have been all over the news. Back in March, we had a 35% crash in the stock market, followed by the best quarter of the past 10 years. And whenever there are these crazy movements in prices, that also means the possibility to making or losing a lot of money. And this of course is gonna attract people, right? It's not a coincidence that over the past 3 months, all the major trading apps such as Robinhood, Webull, Trading212 and Plus500 have all registered a record number of downloads. We're talking hundreds of thousands of new users. And so the question that rises is, how can you make money in the stock market? But before I dive into it, I just want to make a couple very quick premises. First of all, no, this is not the beginning of some advertisement for a course. There's no free webinar, there's no link in the description that's gonna bring you to a landing page where you put your name and email address and then you get to download some fancy PDF. The only thing I'm gonna ask you to do is to drop a like to the video and subscribe to the channel if you like the content and wanna see more of it. And the second thing is that I'm also relatively new to investing. I opened my Trading212 account just about a couple weeks ago, which might bring you to ask yourself, why should I watch this guy rather than go on some more established channel with millions of subscribers and lots of videos? And don't get me wrong, I watch tons of YouTube content every day as well. I spend at least 1 hour every day, if not more, watching YouTube videos, and most of the channels that I follow have tens of thousands if not millions of subscribers. And exactly because I spend so much time watching them, I also know what you're not gonna find on those channels most of the times. The basics. Like, you wanna start, you don't know much, but you understand that there's a possibility to make money, and it sounds interesting and fun, and you have some money on the side and you wanna invest them. And how do you do it? How do you actually buy a stock? How do you actually sell a stock? What are the trading platforms? What are the differences? What are the fees? Like, I had so many questions, and a lot of the times to answer them I had to spend hours researching and going online and looking at different YouTube videos, and most of the times I just didn't find an answer to the most basic questions, which is exactly what I'm gonna try and do with this channel. Create quality content that at the same time covers all the basics, so that if you're new to this world and want to start investing, you will know exactly what you need to do and how you can make money yourself. And with that out of the way, it's finally time to talk about my favorite topic, money. So, there are a lot of different ways to approach investing and the stock market. And most of the time, there's no clear boundaries between them, but what I'm going to explain are what I think are the 3 main approaches to investing in the stock market. And there will be a 4th one, which is option trading, but I really recommend you stay away from that. It's extremely risky. It's probably borderline gambling, and you can lose a lot of money. And as a little disclaimer, none of what I'm saying in this video constitutes financial advice. Please, before you do anything with your money, before you decide to invest them and where to invest them and how to invest them, always make sure to think with your own head and to contact your financial advisor that has your best interest in mind in order to make the best possible decision for you. So the first one would be day trading. A day trader tries and predicts the daily fluctuations in the price of a stock. They never have any leftover stocks at the end of the day. They always sell everything and then they buy during the following day. So for example, behind me, I have a graph for today's stock price of BP, and what a day trader would try and do is buy the stock around this area and sell around here. And that's gonna be a variation of around 5 pence per share, and what a day trader does is buy thousands or tens of thousands of shares, and it can mean 50 pounds, 500 pounds of gain just on this single trade. And most of the times a day trader does like 3, 4, 5, 10 trades a day. And don't get me wrong, it's not gonna be right all the times. Maybe 7 times it's gonna be right, 3 times it's gonna be wrong, which means that 4 times in the day he made money. And it does that every day of the week, every week of the year, and at the end of the year that can add up to a lot. The second way is gonna be growth investing, and that basically means trying to understand the market, try to understand the companies in the market and try and predict big growth of some of those companies or even some of those sectors. For example, let's say that you work in the clean energy sector and you have a very strong belief that in 5 or 10 years all the energy that we use is gonna come from clean energy. There will be no more oil, no more electricity, none of that, just clean energy. And what you can then do is find a good company in the clean energy sector that you think can become the next industry leader and invest in that company by buying their shares. Or even just invest in the whole sector by buying an index fund, which is basically a fancy term to say that it's a basket containing a lot of different shares of a lot of different companies in that sector. So you're not gonna make as much money as just buying individual stocks if you pick the right ones, but at the same time, if you pick the wrong ones, you're not gonna lose as much money, right? It's gonna be an average. And if the sector as a whole grows, the index fund is gonna grow as well consequently. Growth investing can be both a short-term investment or a long-term investment. In the examples I was making earlier, we're talking 5 to 10 years for the whole sector to develop, and that's going to be a long-term investment. At the same time, you can also try and make predictions on what's going to happen in the next 1 to 3 years and invest in those companies accordingly. For example, if you saw the potential of Tesla last year and bought their stocks for around $200 each for each stock, right now you would have made 5 times your money because those stocks are now worth around $1,000 each. Just because the company grew so much in the time and so many people realized the potential that not only electric cars, but Tesla specifically as a company with that CEO, with Elon Musk, one of the craziest person on the planet, can have. And the third and last one, which is also going to sound like the most boring one, but it's also probably the safest, is dividend investing. So wait a second, what is this dividend thing? Let's go back for a moment. So when you buy a share, what you're doing is not just buy some title on your phone. You're actually buying and owning a little part of that business, right? And if that business is making money at the end of the year, they can decide to give back some of that profit to you as a dividend. That's a way to thank you for your support, for putting money into their stock and hopefully attracting more investors. And so what you're going to get is a dividend. It's usually around 1, 2 to 5%, 10% in some extremely rare cases of the value of the stock goes back into your pocket. And what you can do with the money from that dividend is reinvest them and see the magic of compound interest just multiply your money over time. So compound interest means that you're not only making interest money on your initial investment, but you also make interest on the interest that your investment generates. What this means is that let's say that today you're going to invest £100 at a 10% return rate per year, which means that at the end of the year you get back £10. So you have two options. The first one is just take those £10, go out for dinner and spend them, and you're never going to see them again. And then next year you're going to get £10 again, and then year after you're going to get £10 again, and every time you take them out you spend them, and over let's say 10 years you made a total of £100 from your original investment, plus of course the 100 you still have there. Right? The second thing you can do is invest those £10 again in the same kind of investment at the same 10% return ratio. And what that's gonna do is next year, instead of making £10, you're gonna make £11 because you don't only have £100 investment, but you have £110 investment. And with time, this effect is going to be exponential. So I'm going to put a graph on screen to show you how much this effect can skyrocket with time and what's the difference between simple interest and compound interest. But just to give you like a general idea, if you invest £100 today at a 10% return rate per year, in order to make £400 total, that's going to take you 30 years. If you just take the simple interest and every year you take out those £10 that you make of interest and you spend them. But if you use compound interest, so you reinvest those £10 or £11 or whatever you make every year to make the same amount of gains, it's only going to take you 14 years. That's less than half the time. And the more time goes on, the more this effect is going to skyrocket, which means that during the same time frame you can make 2 times, 3 times, 4 times, 5 times as much money as you would make with the simple interest. And for this reason, dividend investing is a strategy that usually only works well in the long term, but at the same time it can bring some incredible results. So let's say that you start at 20 years old and you decide to put only £100 per month in a 10% per year investment over the course of your lifetime. put 100 pounds this month, 100 pounds next month, and you go on this way every year, and you get your dividends and you reinvest them at a 10% rate, what's gonna happen is that by the time you're 60, you only invested a total of 50,000 pounds, but in your account, you're gonna have almost 600,000 pounds worth of money, and you can comfortably retire and use those money as a nice addition to your pension to live very comfortably. So I hope everything makes sense and is clear. To kind of recap, the main strategies I talk about is, first of all, day trading, secondly, growth investing, and third, dividend investing. If you have any question or anything you didn't really understand, please leave a comment below and ask this. As I said, the goal with this video and all the following ones is gonna be like explain all the basics in a very simple fashion, in the same way that I wish somebody could have explained that to me when I started getting interested into investing a few months back. That's everything for today, and see you in the next video.